One. Hey everyone, RSP contributions and deductions. Welcome. It's Tax Tip Tuesday with me, Christine, on February 1st. I won't even talk about what it's like in Calgary. It's cold again, so I'm not sure how anyone is ever supposed to get healthy when the weather yo-yos back and forth. So I still have my cough, and sorry, we're just going to snooze that call on my phone. So it's Tax Tips Tuesday, and today we're going to talk about RSP contributions and deductions. So, what is RSP contribution room? When a taxpayer, so when you earn certain types of income, the most common being employment or self employment income, you accumulate contribution room for your RRSP plan every year. Sorry, kid now. Um, So you accumulate RSP contribution room every year. The amount of the RSP contribution room that a taxpayer gets every year is 18% of their earned income up to, for 2021, was $27,830. So for example, if you earned, and now we've got an alarm. Boy, I've just got everything going off right now. So for example, if you earned income of $100,000, your RSP contribution room would increase by $18,000. There is no lower end age limit, only an upper age limit of 71 for contributing to your RRSP. So a teenager with a part-time job can start building their RSP contribution room as long as they file a tax return to report their income from the previous year. Your RSP room is contribution room is also cumulative. This means that you do not lose it if you don't use it. You get to bundle all of the previous years of contribution room up and use it at any point in the future when it's most beneficial to you. So it's been my experience that most do-it-yourselfers will always deduct their full contribution without realizing that it might be doing them more harm than good. What I mean by this is I often see clients who are, for example, in their mid-20s and recently graduated from university who are listening to the general guidance that RSPs will reduce your tax bill. But what they don't understand is how all the individual components in your tax return work together to produce the best bottom line, the best tax results. So these mid-20 people who are recently graduated are, one, likely in the lowest tax bracket, which means here in Alberta, a $1,000 contribution might save them $250. But if they deferred that deduction for a year or two, they could possibly save upwards of $500. And two, more importantly, because they just graduated school, they likely have tuition tax credits available to them that are already reducing their taxes payable to zero or close to that. So by deducting that $1,000 contribution, they might only be saving something like $50 or maybe a little bit more, a little bit less, instead of the possible $250 to $500 if they carried it forward a year or two. So it's important to know that, one, you can carry forward your RSP contributions indefinitely. Two, carrying forward your RSP contributions doesn't affect your ability to participate in the home buyer's plan or the lifelong learning plan. Three, if you deduct your early contributions every year and need to withdraw your RSPs in the future, you will likely end up paying more tax on that withdrawal than the tax you saved in the first place, because you're likely in a higher tax bracket when you make that withdrawal than when you deducted it. So four, carrying forward your RSP contributions could be advantageous because you could deduct your contributions in the year you made a withdrawal, thereby negating any additional taxes. So I had put $10,000 in, I took $10,000 out, so it's an in and an out. You're not paying any additional taxes. So there are many components to building a successful tax plan each year, and RSPs do benefit you in the long run if you're using them correctly. Remember, if you plan to contribute this year for your 2021 taxes, the deadline is March 1st, 2022. So in 28 days. I hope you enjoyed this week's Tax Tuesdays a little bit early because I got to go get my kid because he didn't have a bus pass and it's cold. But anyway, come back next week, for another tip, and I hope you enjoy the rest of your week. And I'll just also shout it out that there was a Facebook Live earlier today about questions and answers regarding my upcoming free masterclass about how to stop leaving tax money on the table and keep more of it in your pocket. So if you want to scroll down through the page and find that as well for a quick viewing, it's only 2 or 3 minutes long. Happy to answer any questions that you guys might have about that as well. Have a great day.